Graham Healy from Trade Canary. Now we'll show you how we turned an investment of $153 Australian into 2,617 in 3 months, and that's an 18x return on Goldman Sachs. And this video shows you how we actually went through that and all that was basically involved. Okay, enjoy the video. Trade Canary, Australia, New Zealand, Graham Healy, over and out. Good morning, it's Graham Healy from Trade Canary, Australia, New Zealand. Now, remember some of my other videos, we're basically focusing on beginners in trading, or people like myself who are semi-retired and you just want another income stream. Well, I just want to give you a really good example today. Now, I got some of the profits out of this. Had I hung on for another 2 days, and I would have increased the profit margin by $1,000 US. Now, the first caveat we give, of course, with all Trade Canary videos and Graham Healy as the official affiliate in the South Pacific, none of this is financial advice. This is simply education for you if you have a trading account through the various processes and a registered stockbroker, which we recommend Capital 19, of course. And what we're doing is educating you and giving you the tools or the toolbox through Trade Canary to be able to make a reasonable amount of return conservatively with an opening account of 1,000 to 5,000 Australian dollars. Now, I started with 1,000 Australian dollars, and as I've said on many videos, that basically I spent most of my money doing the education, which is probably 10 grand plus I did in educating myself with the various systems. And then I was introduced to Trade Canary and realised that Trade Canary had all the tools that I needed to make a lot of quality decisions in trading. Plus, there's a full backup service. Plus, I do the beginning backup service. So just have a look at Trade Canary Australia-NZ.com. and you will see what I'm talking about now. I just wanted to get this one out because I had to kick myself a couple of times. In trading, you do educated estimates, right? That's what we do. We don't do guesswork. We do educated estimates, and then we just see how the market forces apply. Now, I just wanted to show you this one. And, because myself, I'm no millionaire or anything like that. I do understand that the trading processes. I started about 2 years ago, officially started my account about October last year with only 1,000 Australian dollars. And since then, the account has fluctuated in liquid capital up to about 5,000 Australian dollars. So that's not bad. You imagine putting that in the bank where you'd be flat out getting 5%. Or if you rack up a credit card, they're charging you. You might do cryptocurrency and all that sort of thing. But the trouble is, with cryptocurrency these days, it's great investment. I'm not knocking cryptocurrency, but you've got to go long term with cryptocurrency these days to sort of look at crypto as if it's investing in real estate or something. So that's a different subject. But we'll get back to the Goldman Sachs. Now, Goldman Sachs is the one I want to focus on today to give you a little bit of an idea. And I've got the chart. It looks a little bit confusing there because I've got my hieroglyphics on it. First of all, the chart, I use a software called Trade View. I'll just repeat that again. Trade View. Now, Trade View, you can get the beginner's Trade View for about $26 Australian a month. It's basically a conscription or a subscription. I'm on the next one up, Trade View Plus, where I can do charts, alarms, and all that sort of stuff. And I think that's about $59 a month. Well worth it. They give you a lot of information. And you can draw your own charts. Now, I'm not going to go into the intricacies of drawing charts and everything. or what sort of strategy charts we've got on here. I just want to show you how good this trade was, and there's a stack of them. You know, in my portfolio, I've got about 30 trades going at once. Now, not all those trades are firing. There's only 2 or 3 that'll fire on a particular week. So out of those 30 trades that I've got, I don't invest any more than about 100, 150 Australian dollars a trade. I keep my risk very, very low, but I keep my returns when they happen very, very high. So how do we do that? As I've said in the other videos leading up to this, I'm using the artificial intelligence, or as we call it with Trade Canary, it's a professional hedge fund data analyzer. We're analyzing the data of 11,800 companies on the New York Stock Exchange, and millions, maybe billions, but certainly millions of data points are being analyzed by the software called Trade Canary. Now, of course, as I've said to you before, you can go on to the Australian and New Zealand affiliate site, my website there, which is Trade Canary Australia NZ.com. Okay, let's get on to this. Now, as you can see here, this is Goldman Sachs, and this is what you call the truth chart. So the truth chart, I'll just go into this briefly. The truth chart here has got, I think that's the 21-day exponential moving average. And down here we've got, let's click on that, 50-day simple moving average. And then you've got the 200-day simple moving average. So basically these 3 lines here give you a historical indication of where that trade is going. And then, of course, you've got the normal candles here. Explain all that later. So when I actually engaged on this trade, and I'll show you exactly how I do all this, and if you want to do a basic course, I mean extreme basic, like a beginner's course, I'm running them out of my website, Trade Canary Australia New Zealand.com, and it's only $500, or you can break it down to payments of $150, and I'll go into the detail of just base trading that actually works. So we're educating you to use the tools for yourself, okay? So you see here 447, which was the value of the shares on Goldman Sachs around about the time that Donald Trump, and I'm a Donald Trump fan, I'm not against Donald Trump, I'm for Donald Trump. When Donald Trump brought in the tariffs, everyone panicked, right? So you can see here, well, those who are reading data like we do, we didn't panic, doesn't matter. To us, it doesn't matter. So as you can see, Goldman Sachs did a whopping big drop down on the chart, and I'll show you another chart in a second and how I go about this. And about 447, level 447, which the shares or the stock price was 700, not 715, but 447, and that was about the 7th of April. So I bought a call at that time, and the call expired. I've rolled it and done a few things around about, I think, where have I got here? Let me think. I think it was about August. We looked at August. One was 16th of May, August, and I'll just show you what happened. So I got in about here, and then I drew, don't worry about the technical side of it. I don't always draw these flags and stuff, but I did on this occasion. So I drew what they call a bull flag, which means that this pole went to here and the trade accelerated upwards and then consolidated across. That's a bull flag. So I drew that in, and the statistical fact is that if this pattern happens, that the trade will then accelerate further up according to the bull flag strategy. Okay, that's not 100%, but it's like 95% accurate. So But I'm not relying on the bull flags either. So I understand all the, the W's, the M's, the bull flags, the consolidation, the channels, all that. I understand all that. I've done 2 years of education on that. But Trade Canary's data processing supersedes all that. I just happen to know that on the side as well. So here it is, as you can see, Goldman Sachs then shot up to, I've got it written in here, all-time highs. In other words, it's never been to this level before, and it's broken through. As you can see here, it's actually broken through, right? Now, I made some money out of Goldman Sachs because when it was about here at its all-time high, I had to make a decision. Is it going to go to a higher high, or is it going to drop back to a lower low? So that's when you use the diagnostic tools of Trade Canary. You look at about 3 charts and you think, okay, what decision will I make here? Is it going to drop, or is it going to break through that barrier and keep going? Well, and the advantage was that we bought at the low point. So you always buy at the low point and sell at the high point, right? And you can do stuff in between, but I'm not going to go into that. So basically the rule of thumb is you buy at the low point and you take out a contract, which is an options contract over time. The more time, the better. And when that trade accelerates upwards, you're making money when it gets close to the target. Okay, so I've just read it here. I said, I rolled up Thursday, the 15th of May. I had a call for 7:45 at the 18th of July, right? So it was synchronized, which meant that the earnings, which is announced here, I think I've got a little tag, earnings, where there's another website where you can get all this. I won't go into that in this video. Earnings is Wednesday, the 16th of July. That's passed. And they announce it at 7:30 a.m. So with TradeView, you can write all these things in. I also take notes, but you write these in. So when you lift up the chart, there it is all there in front of you. So you don't have to remember 30 trades ago, what did I do? Here they are. It's all on the screen. So at about here, at about 687, when Goldman Sachs got up to about the share value of $687, I decided that is it going to go to the highest high, because it actually cut through the all-time highest high, which was 673, a level of 673, and it burst through that, and I thought, nah, it's possibly dropped back, and I just decided to sell at that particular point in time. Now, this is what happens in trading. Okay, I made 400 American dollars out of that, straight in the bank. That's not bad. That's 400 is what is it? It's 400. It's about 800, I think, 600. So you just calculate it out. I'll do it now just so to keep everyone happy. So 400 American dollars. We'll just convert that over. Just one moment. 400 American dollars. One moment, please. 400 US dollars to AUD is 608 Australian dollars. So 608 Australian dollars in the bank. And all I put in was originally, let me see, 93 US dollars. That's 153 Australian. 153 Australian, and I got 600 back. Or the equivalent was 93 US dollars, I got $400 back, 4 times the amount. Now, you think about that. What bank could give you that sort of interest, right? And the only thing is that you've got to educate yourself and how the whole system works with trading. And I'm trying to do that. Like I started with as I say, $1,000 in the account was my float. And my attitude was this, that I'm not going to throw money at something when I'm not up to speed with it, where I don't know what I'm doing. So I'll get my education first, and then I'll gradually, conservatively build up my account. Now, my objective for the next 6 months is try to get my account up to, say, 50,000 in the account, and then from there go to 100,000 within 12 months. But now I've done the training, I'm sort of on the way to doing that because I'm confident in how I can read the charts. I'm confident and I understand what the terminology is all about. And I'll make that relatively simple for people who are just starting off. And of course, I've got the Trade Canary software and I'm the official affiliate here in Australia, New Zealand. And that's a big advantage for me. And if you've got the revenue to, purchase or subscribe to Trade Canary, I recommend that you do that, but you don't necessarily have to do that up front. You can get like I did, you get education first, give yourself 3 to 6 months or 3 months at a minimum. And then you go, right, I'm starting to understand this. And then you step on with the Trade Canary, and then all the backup with Trade Canary is included in that package as well. So you do the beginning stuff with me, you do the advanced stuff with Trade Canary. They do have beginners teaching and all this sort of thing, but I find that when you add in what I'm doing, it's sort of for the average person out there, it's a lot easier to understand, because I've sort of had to do the hard work myself, and then I'll make it a lot easier for you. Okay, so here we go. So that I pulled out around about there, 686, and I got about 400 American dollars. 2 days later, this is what they call like that little, I'll try and get that a little bit bigger. That's called a doji. That candle is an indecision candle. It doesn't know whether to go up or whether to go down. In other words, the market forces are fighting upwards and then backwards, upwards and backwards. The next day after that, which was the 30th of June, boom, it shot up. But the sellers, because it's red, the sellers there sort of won the battle, but it still made ground. And then the day after that, on the 1st of July, again, there was a big battle. You can see that candle there. I won't go into the intricate details of how these candles are formed. It's a mathematical formula sitting behind it. So the sellers actually, it was more selling than buying, although the battle, you can see these two, like there's two wicks, one at the top, one at the bottom, and there's the thickened part in the middle of the candle. That means there was it obviously shot up here in the buyers, and then the sellers started to pull it back down. Buyers, it's a tug of war that goes on a market every day, and I'll show you that in on Yahoo Finance. It's just a simplified version of what I got here. And then on the 2nd of July, hey presto, boom, the buyers won out, and there was a few good points, because on this software you click here and you see Goldman Sachs trading in the 2025 stress tests are estimated at 300 million down from 21 billion, prompting questions about Fed's single day testing approach, blah 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 blah. So you always have the news report, which we don't totally focus on that. We just, oh yeah, that's what's happening today with Goldman Sachs. It may or may not affect the share prices and what have you. But in this case, the 2nd of July, bang, she shot up to here. Now that's 716 or 715.89. Now, this is where I was kicking myself. And I did a little, I've got these little symbols. You can get them on Trade View. Here they are, and I just use a few of them. I missed out on 1,000 extra US dollars by pulling out 2 days early. Now, that's trading. It could have went the other way. That's like we say in your disclaimers. Your markets can go up and down, but I pulled out when I thought, okay, it's breaking through a higher high. Will it go higher high or lower low? And I'll show you that later. So I had to make an educated estimate and say, nah, I'm going to pull out now while I've got, a profit of 400 American dollars. The other thing I could have done was put in what they call a stop, a trailing stop. So I put an electronic trigger into my trading account, and I level it up at, 350 US dollars. And if it drops down $50, boom, 350 US dollars. goes into my account, and I just get the money anyhow. So I'll do a video on stops, but that's basically it. You whether it goes up or comes down, as long as you put a trailing stop in, you'll get the money anyhow. But on this particular day, I had another couple of trades that I had waiting on my list that I thought, okay, I'll sell this and buy these other couple, which I did. So sometimes my attitude's this: I'm not throwing money into my account all the time. I am, if I make money, like in this occasion, it's $400. I then bought another couple of trades that I had sitting there with big potential. I thought, okay, bang, I'll use the money for that. And on this note, on your trading account, your objective is to continually build up your trading account. But the principle I use, and I'll explain this later, if I make $1,000 US, or let's say $1,000 Australian, we'll just keep it in Australian dollars, I take out 50% to my savings account, and you can do that. You can deduct, you can take the money out, you can withdraw it and put it in, and I leave 50% in there. So that's how I do it. So I'm taking some of the profits that I make, 50%, and leave 50% in there. And just a little note too as well, when you're taking money out of your account, that is a declared income. So that's a declared stream of income, and you've got to account for that at the end of the taxation year. So you want to know more about that, you can have a talk to our referral accountants, or in particular Adam Kern, who just happens to be my son. He's doing he's a fully qualified accountant. So you can have a chat to Adam about what the ATO legislation is on that income stream. And it just depends where your position is. I mean, I'm semi-retired, so I've got to take account of various things. You might have a full-time job, and then you've got to take account of the extra income that you're earning from the trading through Trade Canary, Australia, New Zealand. Now, you'll see this image or this note that I put in on here. No, sold 5:47, 18th July on Friday, the 28th of June, for $400. It's now worth, had I not sold it, it's now worth $1,660. I missed out on $1,200 in 2 days, right? So that's how trading can be. What bank account would give you that sort of return? And even I won anyhow, but 2 more days, I would have gone to 18 times my investment. Now, just on that, I just want to highlight this for you, and I'll just make this video short, and I've written this down. The risk for me was $93, right? More people spend that on going out to dinner. $93, $150. They spend more, going down to football and buying a few pies or something. They go buy the tickets to be more than that. So I put in $93, and the return, today's return's more, but at this time that I did this on the computer, my return would have been $1,660, which is the equivalent of 2.5 grand Australian. So for investing 150 Australian dollars, which 93 US is, I would have got back $2,523 over. I've worked this out. I took out the call in April, and that was till August, and it's only now just turned July, so that would have been 3 months. 3 months. 3 months, I invested 150 Australian dollars, and in 3 months you divide that by 3, that's 700. I mean, it's insane. This is 7 into 253, all right? I'll just do that to make certain we're accurate without being silly about it. So we've got 250, 23 divided by 3, goodness me, I've made 841 Australian dollars a month. It's insane. That is, I've worked that out. That's 1,880% interest on your return, on your investment. Is there anything that can do that? That's what I'm saying. Now, I'm a small investor and I've had to do the hard yards to learn how all this works. Now, for me, say for instance, I had 100 grand in my account, which I haven't yet, but that's the target, right? If I had 100 grand in my account, the risk would be I could take a greater risk. So with the rule of thumb is this: we always do careful risk management. In other words, you got 1,000 in the account, you are only going to sign contracts, option contracts for say 10% of that, which is 100. I've pushed, I have a bit more than 1,000 in there now, but initially I started off just with 100 and then it went to 150. Sometimes I do 200 Australian dollars on a contract. But if I had 100 grand in the account, 10% of 100 grand is what? That's 10% of 100. Is that 10,000? No, that can't be right. 100 grand. Let's have a look at it. We don't want to be investing that. So the more money you got in your account, you drop back those percentages, and I'll just do this, just clear this. So we've got 100,000 in our account, right? Here it is. That's a million. We don't want a million quite yet. We're working on that. And okay, so I'm going to multiply that by 10% just to be accurate. So that's 10,000. Now there's no way, well, some bigger investments you couldn't invest 10,000, but you'd probably go 5%, 2 or 3%. So if you had 100,000 in your account, let's say you're starting to become a little bit of a big timer. So I'm going to multiply that by 3%. That's $3,000, right? Now, if you've got 100 grand in the account, right, in your trading account, and 3% of that you're investing and you already know what you're doing, so 3,000 you're prepared to put into these trades, this trade in particular, that would mean, just hang on a second, we're going to multiply that by, I said it got to a return of 18x, you get 54,000 back. $54,000 back. Your account would not be 100 grand after this exercise if you had the what I call the minimal percentage risk based on what capital you've got. It'll be 150 grand. You would have increased the value of your account by 50%. So I'm just saying, at the end of the day, the principle's this: I'm starting small, but knowledge is power, and Trade Canary gives you the data to process and I'll quickly go through that in a second. But you can imagine the potential you've got here. There's nothing on the planet that can increase your account like not hype trading, but calculated, data-driven trading with no emotion in it. We're not gambling. We're looking at the stats. We're looking at the stats. We're looking at the actual data, and then okay, this is where the highest probability of where that trade will go now. So Goldman Sachs, I missed out on over $1,000, but I only bought one options contract. So with that $193, which is equivalent of about 153 Australian, I only bought one contract. Now, if I had 100 grand in the account, I would have bought 10 contracts. So 10 contracts, you just quickly, instead of one, you go click 10. And instead of investing 93 American dollars, I would have invested 930 American dollars, which would have equaled about 1,500 Australian dollars. So again, if I invested the 1,500 Australian dollars, which was 10 times that amount, if I had 100 grand in the float, as I said, you got, let's say it's 1,500 multiplied by, it was 18x return, I would have got $27,000 back. This is trading done with informed, educated decision making, not guesswork, right? So that's the advantage of Trade Canary. Now, look, I just remind everyone, I had to spend 2 years training and educating myself. I've got a med science degree, so I'm an analytical person at the best of times. So I wanted the education first before I started doing all the trades. But now I can see how we can basically make good money on very, very minimal investment initially. A startup capital doesn't have to be much at all. I've had several small businesses, and you're in for hundreds of thousands of dollars, or at least $100,000 when you buy a small business, and chances are you just earn an income out of them. So you're not going to be earning these sort of returns. You won't be getting 18x on your small business, I guarantee it. Just a lot of hard work. I've been there, done that before I was semi-retired. So just keep that in mind, what I've just said. I'll put this on the video, but now I'll just go through a few of these charts very quickly to give you an idea how we go about calculating this to start with. And if you're interested, just go on to Trading Canary Australia, or Trading Canary Australia-NZ.com, and you can join up my beginner's course, which is only $500, and just mark off about 3 months to do that, and you get access to the education information and what have you. You can buy Trade Canary software, which is our main software. That's like around about close to 6,000 US, which is about 8,000 Australian. So, if you can afford that, that's great. But if you can't, you can just do the beginner's course with me and learn how to do these various trades in a conservative, gradual way, not a hyped way, not promising people to be millionaires in 10 minutes. What I'm giving you is logical, analytical education to the point where you can operate your trades basically independently with assistance from myself and the Trade Canary team. That's how I look at it. So, I'm there as a coach or mentor, I suppose, a beginner's coach or mentor. When I'm a millionaire as well, out of this, and I'm certain that I will be, then I've made $1 million. I started with only $1,000 in my account, but I haven't done that yet. I'm not claiming that I've done that, but I'm just showing you one of the trades I did, and this is the last couple of days, where I could have turned 93 American dollars into 1,600 American dollars in about 3 months. Now you multiply that by how many trades you're doing, and you're in business. Okay, that's the end of part 1. And in part 2, I basically go and show you how I worked all that out, did the preliminary study to get the Goldman Sachs trade, and how I rolled the trade, etc., how we examined that on Trade Canary, and how we did the preparation work basically. During these trades, I'm not doing anything during the actual trading hours except just watching the trades progress and see if there's any movement in the portfolio. So the second video is just me showing you how to navigate through the graphs and what sort of, like we've got Trade View, you've got Yahoo Finance, you've got Trade Canary section which inspects the actual company, and we get to the bottom line with all that. So part 2 is a little bit more of the technical side, but I hope you enjoyed part 1. And like I'm saying to you, this is just one. I've got 30 trades in my account at any one time, and there might be 1 or 2 of them that fires. For instance, what I've just said, Goldman Sachs fired this week, and also Morgan Stanley's on the way up. Boeing aircraft, it's gone up and down, but I've taken another call out. It looks like it's advancing beyond its highest high. So we explain all that in the educational section that I've got on the website www.tradecanaryaaustralianz.com. And that course I'm doing is just a raw beginner's course. It's only $500. Go onto the website and you can sign up from there, or just give me a call and have a chat. Graham Healy over and out. Have a great day and safe trading. And remember, none of what we say is financial advice. We have an accountant on the website, Adam Kern, that you can contact for all the compliance for your income, if you're making an income out of it, that is. But in the meantime, we're teaching you how to make quality, informed decision on your trading decisions. Have a great day.